Hi everybody, welcome back to the channel. So if you're new here, this is just me trying to build a dividend portfolio. I started this tax-free savings account earlier in the year, and we started off with $500, and my goal is to bring this up to a $10,000 portfolio, just investing in good dividend-paying companies. Essentially companies that reward you for being a shareholder of that company. So say you own a share of TD Bank, they every 3 months they give you a small dividend, which is just a distribution of profits from a corporation to shareholders. Excess cash that they have, and they reward you as a shareholder because when you own a share of a company, you are part owner of that company, and you are entitled to part of the profits of that company. So if you want to follow along with the journey, just hit like, comment, and subscribe, and you can follow along with the journey. And I purchase all these stocks on Wealthsimple Trade, so you have no commissions on Canadian listed stocks and ETFs. So feel free to join my link in the description where you can get the value of 2 free stocks just for signing up. So I picked up more shares of Algonquin Power and Utilities, AQN. So we went from 35 up to 38, just a good utilities company with a lot of renewables. And it's our worst performing position just because a lot of bad news, like, the Texas storm last year. They keep making acquisitions, so they keep purchasing, smaller businesses for very low prices. And, they can convert like a coal plant into something that's less harmful to the environment. So they're buying these assets really cheap, and then they're adding it to their existing business. So I think they're doing very well. I think they have good potential. It's definitely something that we need. And we got more of the banks. So we got more Scotiabank. I'm just buying more fractional shares of this, just because the banks are now allowed to raise their dividends. They haven't announced it yet, but we should be hearing something fairly soon about that. I also picked up another share of Granite REIT. So this is our industrial real estate sector. So think your e-commerce warehouses, as well as your car making plants. So this is a great business. They have a lot of warehouses like in Canada, US, and Europe, and it's one of our better performing positions. And I had to average up in this one just because the first time I bought this one it was at 83, but good businesses are gonna grow, and unfortunately you'll have to average up if you want to continue investing in them. And I also sold off a lot of real estate recently to purchase Suncor, as well as Alibaba. So I'm definitely a little bit light on real estate. I want to buy a bit more just to get our real estate exposure up a little bit, just because it's a bit under 10% right now. I want the allocation to be a little bit higher just because I don't own any real estate physically, so owning in the stock market is the next best alternative to that. And then Power Corp just recently announced that they raised their dividends. So they actually raised it by 10.2%, I believe. So that's a great increase. So that's another thing I love about dividend stocks is that in a good growing company that pays a nice dividend, if the business that you're picking is growing, has extra cash, each and every year they can give you a raise on your dividends. So Power Corp, for example, will pay you $1.79. And with a 10% raise, that's an extra 17 cents a year. And that doesn't sound like a lot, but if you think about how many shares you have, if you have hundreds of shares or thousands of shares, you're getting 17 cents for each share you own. And that's just for the 1 year. I mean, most of us aren't getting 10% raises, at our job. So getting that from dividend stocks is fantastic. So that's one thing I really look for when I look for dividend stocks. And then I also purchased some more TELUS just because they also raised their dividends twice in 1 year. So recently they raised it by another 5.2%. TELUS also recorded like really solid growth, really good earnings, and they're just such a proactive company, at least compared to Rogers and Bell, and that's why I picked TELUS over the other two, because they seem to be growing. Rogers and Bell are more stagnant. TELUS is diversified a little bit more. They're not just in the telecom sector. They're also in telehealth. They're in agriculture, security, you name it. But TELUS is usually the first to change. So they're the most adaptive of the big three telecoms. And for the dividends earned, we've just crossed over the $200 mark. So I've received $216.60 in dividends so far since starting the portfolio back in February. Our annual dividends are up to $468.26. So we're getting closer to our two goals of hitting $2 a day in income, hitting $500 a year in dividends, because we're at $1.28 every day just in passive income. And annually we're earning $468.26. So as we deposit more money, as we're getting more dividend payments, we can reinvest into the portfolio and get closer to the goals that I've set out. And for the month of November, we've earned $31.41 in dividends. So a pretty good month in November. We should be having another good month in December, and so on and so forth, because I'm just trying to deposit as much as I can into this portfolio so we can get the dividend payments just growing at a faster rate, and making them more relevant, just because $39 a month is nice. Obviously, it's very good compared to when I started, when it was just like $5-6 a month, and we've really grown that from there. Like, we started with 0, we're up to as high as $38.75 so far. So just the key to dividend investing is just to continue reinvesting your dividends, but also continue depositing consistently, every week, every 2 weeks, every month, whatever it is, just whatever you can. You have to put in the work at the beginning when you grow a portfolio, because to make your money work for you, you need to throw in a decent amount of money consistently to get your dividend income to a point where it can replace some of your income or all of your income eventually in the future.